Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Western Union Co. quarterly report. The Western Union Company provides a wide range of financial services to its customers worldwide. Some of the key businesses and services offered by the company include money transfers for international cross-border and intra-country transactions, bill payment services, money order services, retail foreign exchange services, prepaid cards, lending partnerships, digital wallets. These services are provided through a network of retail agents, owned locations, websites, mobile devices, and media networks. The Western Union Co. (WU) stock price has remained relatively stable to slightly declining over the past year, with no significant changes, exceeding a -3.2% drop. This can be attributed to several key factors. Mixed financial performance is one of the main contributors, as Western Union's revenue growth has been largely flat or in decline. The company faces intense competition from digital platforms and fintech startups that offer lower fees and faster processing times, leading to a decline in its traditional retail business. Geopolitical events and U.S. immigration policies have also impacted Western Union's revenue, particularly in its consumer money transfer segment. Additionally, the company is undergoing strategic transformation efforts through its Evolve 2025 strategy, which aims to drive digital growth but has had a muted impact on the stock price so far. Cautious investor sentiment and analyst outlook further contribute to the lack of significant movement in Western Union's stock price. Despite some positive segment performances, concerns about long-term growth and market share persist, leading to a cautious approach from investors. The primary drivers of revenue growth or decline are largely influenced by regional performance. Revenue decline is primarily driven by the consumer money transfer segment in various regions, with significant drops in North America, -12%, Europe and CIS, -6%, Middle East, Africa and South Asia, -11%, Latin America and the Caribbean, -9%, and Asia Pacific, -7%. The consumer services segment also experienced declines in some regions, including a 71% drop in Europe and CIS, and a 100% decline in both Middle East, Africa, and South Asia and Asia Pacific. On the other hand, revenue growth is driven by the consumer services segment in North America, +49%, Europe and CIS, +13%, and Latin America and the Caribbean, +4.8%. Other drivers of revenue decline include reductions in transactions from Iraq, decreases in transactions and revenues in certain regions, and foreign currency translation impacts due to Argentina's hyperinflation. Net income and profit margins decline due to increased expenses and currency fluctuations. The company's net income has experienced a significant decline, with a quarterly decrease of 47% and an annual decrease of 48%. This trend is also reflected in the 9-month period, where net income decreased by 30%. The profit margins have also taken a hit, with operating income margin decreasing from 15.9% to 19.6%, and net income margin dropping from 25.5% to 13.5%. The main reasons for this decline are attributed to increased direct transactional expenses and other segment items in the consumer money transfer segment, as well as sensitivity to foreign currency exchange rates and interest rate fluctuations. These external factors have had a substantial impact on the company's financial performance, leading to decreased profitability. The company is indeed generating positive operating cash flow, as evident from its financial summaries. For instance, on page 6, it is mentioned that both 2024 and 2025 have shown a net cash provided by operating activities, indicating a consistent trend of generating positive cash flow. Furthermore, the company's performance in the first 9 months of 2025 was particularly impressive, with $408.3 million in positive operating cash flow recorded as of September 30, 2025, page 46. This demonstrates the company's ability to generate sufficient cash from its operations, which is a crucial indicator of financial health and stability. The company's debt level and interest expenses have undergone significant changes over the past year. Regarding debt level, there is a discrepancy between the reported figures. While page 5 states that debt decreased by $348.6 million from December 31, 2024 to September 30, 2025, page 46 indicates that outstanding borrowings increased to $2,599.7 million as of September 30, 2025, suggesting a minimal change. However, interest expenses have seen a notable increase. According to pages 3 and 31, interest expense rose by $16.9 million, or 19%, from $89.4 million in 2024 to $106.3 million for the 9 months ended September 30, 2025. This significant jump is attributed to an increase in interest expense associated with term loan facility borrowings, as mentioned on page 41. The company's financial performance varied across segments and regions. In terms of segments, consumer money transfer was a standout performer, with revenue increasing to $1,234 million in the 3 months ended September 30, 2025, and $3,456 million for the 9-month period. However, consumer services struggled, with revenue declining to $543 million in the 3 months ended September 30, 2025, and $1,632 million for the 9-month period. Regionally, Europe and CIS was a bright spot, with an 8% revenue growth driven by strong performance in Spain and the UK. In contrast, North America, Latin America and the Caribbean, and Asia-Pacific all experienced declines of 10-12%, 6-11%, and 5-8% respectively, due to various factors including decreases in key markets such as Ecuador, Mexico, and Brazil. Management is optimistic about the company's outlook, citing several key points. The acquisition of Intermex will enhance Western Union's retail presence in the U.S. and expand its reach into high-growth markets. Additionally, the company expects significant growth, driven by increasing cash flow from operations. Management plans to allocate excess operating cash towards investments, shareholder returns, and debt refinancing. They also have a risk management program in place to mitigate market risks, ensuring a strong financial foundation for future growth. The company has made significant investments through acquisitions to expand its business. Notably, it acquired International Money Express, Inc., Intermex, for approximately $500 million in cash and Eurochange Limited, although the date of this acquisition is not specified. These strategic purchases aim to enhance the company's offerings and presence in the market. The company has a history of returning value to its shareholders through both dividend payments and share buybacks. In fact, it has paid dividends and bought back shares, with notable figures including $199.7 million spent on share buybacks in 2025 and $177.3 million in 2024. That concludes the financial summary for Western Union Co. Feel free to comment below, and I will be happy to answer them when possible.